If you have disposable income and debt, this video is for you because we are going to show you how to knock out your debt using whole life insurance. My name is Carmen.
And my name is Darius. And at this point in the conversation, Carmen and I have paid well over $100,000 in debt using this idea of borrowing from our life insurance policies, cash value, and paying off our high interest debt. But before we get into the video, make sure you subscribe to our channel and hit the notification bell to be notified when we post new videos.
Now, jumping into this video, we want to make sure that you all know that there are other ways to get out of debt while purchasing an asset so that you can win in so many different ways. And why in the world would we use whole life insurance to help pay off our debt? Well, let's share it with you. So point number one, you always want to make sure that your family is protected because you never know when something could come up. And that's why whole life insurance is going to give you that guarantee throughout your entire life to make sure that you have family protection. The second point is you want to make sure that your money is always going to be earning at a compounded rate in an environment where it is going to earn uninterrupted compound interest. So just off of those two segments alone would beg the conversation of maybe why don't I look into whole life insurance for just having it as an asset and then understanding how to leverage that asset to pay off debt and or invest, for example.
Now, before we get into the idea of paying off debt or using that money to invest, these are things that we should do anyway.
Yes.
We should be protecting our family with life insurance, be it whole life insurance or term life insurance. We need to make sure that we're responsible in taking care of our family because one thing that is guaranteed is that one day we may pass away. Now, after that, it's really important for us to understand how we get to this point, and it's through discipline and managing our funds. None of this happens without discipline and management of our funds. And when I say management, some of you may call this a budget. So we need to prioritize our savings with our budget so that we are taking care of our responsibilities, so that we make sure that we're liquid in the event that we have some type of emergency, making sure we're liquid in the event that we may lose our main source of income. And we want to use that liquidity to protect our family. Now, here comes the concept of paying off debt. It's the fact that when we borrow money from our life insurance policy, we're still continuing to earn interest. When we use our savings account, for example, to pay unexpected expenses or to pay off debt, we remove those funds from our savings account and we can no longer earn interest because it's not there. We disturb the compounding that we are earning with that money sitting there. Fast forward to leveraging our life insurance policy, we're leveraging the cash that we have on hand. The cash that we have on hand is still continuing to earn interest. We're getting a loan from the insurance company. Now, we paid off high interest debt. Personally, we had high interest debt. The most important thing that we did is we continued to pay that minimum payment. We just redirected where those minimum payments were going because it included principal and high interest debt.
All right, let's put some context to all of this. All right, so what we want to make sure that you understand, like Darius said, and we're going to use our personal example, is first example, over $120,000 in credit card debt. Now for you, debt may not look like credit card debt. Debt may just look like student loans. You could have 6 figures of student loans. You could have medical bills. You could have all sorts of personal loans, whatever it is. We just ball that up together and we call it debt.
You have responsibilities that you don't own that you pay interest on.
IOUs.
There you go.
So all we did was we funded a whole life insurance policy. Let's call it $10,000 because that was our policy. Our very first policy was $10,000 and we had a little over $5,000 of cash value available to chunk towards the 120. Now, Carmen and Darius, what in the world, what is $5,000 going to do with my $120,000 balance? Well, let's share it with you. First and foremost, what we recognized was we wanted to pay off our debt as fast as we could. So we organized our debt in a way called debt snowball, meaning we organized it from the lowest balance all the way up to the highest balance, and we wanted to pay our debt off in that order. You can also do something called debt avalanche, which is where you organize the highest interest all the way to the lowest interest, so that way you knock out probably the highest payment first. For us, we chose the debt snowball because we wanted to get those quick dopamine hits so that we could see the momentum of paying off debt faster, because that's just how we work. You choose your way. So that's why the $5,000 was key, because we took $5,000 and it allowed us to pay off almost 2 full debts like that immediately. And all we did was, if we were paying $100 here and $100 there in minimum payments, all we did was took now $200, and you can either throw that $200 at debt number 3 to pay that off faster, or you can put that $200, let's call it, in your savings account, and you can just keep that for liquidity if you want, and you just keep paying the regular minimum payment. So again, this just depends on how you want to do it. So if you want to be super aggressive, you can take those funds and continue to snowball it to the next debt, and you keep moving it from the next to the next so that you can pay it off faster. Now, every single year for us, we knew that we were going to have to maintain that $10,000 premium because we had that disposable income to do so. And every year we had more and more money available inside of our policy to chunk more money at the debt. So that's why it's, again, important for you to understand this whole concept, because when we were able to pay off our debt, we realized that we had over $2,000 a month now cash flowing back to us, because that was the amount of money that was wrapped up in minimum payments that we were paying every single month. And to be honest, like we've set up many videos, we didn't even realize we were paying $2,000 a month. It was just 100 here, 200 here. You know, we looked at it completely separately. And when we put it all together, we were like, this is a pay raise. Like, what were we doing with our lives?
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy, or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School. Now, the key to it is, if you are trying to get a consumer debt or whatever kind of debt it is, you can't you can't charge those cards again, right? The whole point of doing it is to get out of debt and to stay out of debt so that you can leverage those funds to now create cash flow and invest.
Right. We got in that position because we were in debt, and it's something that we didn't want to do. We wanted to continue to grow our liquidity so that we can have money to invest. And we did that through this process.
Yeah.
We did that through this process. Now, in the example that you gave with the credit card and the student loans, we know exactly what our minimum payment is, and we know how long we're going to be making those minimum payments. We can look on our statements, or we can go on our online profile, and we'll know exactly what date those payments will be paid off. What we're saying is, take those minimum payments and take that date and start paying those minimum payments back to yourself so that you can realize that principal and interest payments. That's the only way we realize it. Because a lot of times what people do is when they pay something off, they'll pay it off early and they'll stop paying it. And that's how we've gotten in trouble over time, is we didn't give those funds something else to do. We just got in more debt. We got in more debt. What you have to do, for those of us who don't have any debt, what we have to do is we have to then start using those funds to invest. We have to always give our dollar a responsibility. Even if it's coming back to us in our own system, we have to make sure we give it a responsibility. And if we're not giving it an order to make money, it's probably going to lose us money.
Yeah, and that's something that I was going to talk about, is the whole beauty behind this whole process is the reason why we get a loan in the first place. Like we said, everything else, when you think about it, when we start paying that loan back, those funds are now realized again, because we can use it again to now invest. Typically, if we use our savings account, when we take the money out of our savings account, it doesn't come back, right? We have to then just put our income back into it, and we're not necessarily replenishing the pot. So the whole point of this is thinking about, okay, we paid off $100,000 in credit card debt using our system, and all of that money is now back into our policy so that we can do it again, plus the interest that we paid into this whole process. And now we can use this to do other opportunities and to fund real estate deals and to really have fun creating cash flow.
Yeah, the idea is to make money. Have your money, make money. And if your money's not making money, that's because you're out there making money for it. You're out there working for it. And if you're working for it, there's only so much time in the day that you can actually do it. But money doesn't get tired. It doesn't have days off. It doesn't have holiday work. 24 hours a day, 7 days a week. Money is working. It may not be working for us. And we need to change that narrative.
Absolutely. So did you know that you could even make money by paying off your debt? And if that is intriguing to you, then we want you to watch our next video.
Remember to own your own lifestyle,
or someone else will.